Okay, now it's recording. Now, today, like I said, we are going to look at what we do beyond recording, beyond financial reporting, right? And here we'll be looking at the non-financial measures, the non-financial activities an organization needs to record. Okay. So now, of course, we know that we have to record our income statement, statement of financial position, the cash flow statement, and the rest of them, just like we said in the last class, right? But beyond that, we still have some things we report, right? We have some items recorded in the financial statement, and that's how we call them beyond financial reporting. It's not just about the financial reporting, right? There are some other things we do that are not just about financials. We have the non-financial reporting as well. Okay. Now, the first one we'll be discussing here is CSR, corporate social responsibility. Right. So, what do you understand by CSR? Anyone? Can someone walk us through CSR?
CSR, corporate social responsibility, simply means what an entity or an organization is supposed to do to the community in which it operates. For example, if I am XYZ Limited and I'm producing, let's say, pure water in my community, and I've grown over time. So, what will I do for the community in which I operate? That is what corporate social responsibility simply means.
Yes. So, thank you for very much for that. Now, corporate social responsibilities are those things we do. All right. Now, when we have this topic, when we had this topic in CSME, then corporate social responsibility, like I used to break it out, is it has three words, right? Corporate social responsibility, right? Now,
Please, your
the
screen, your screen is not
responsibility,
showing. Your screen is not showing, please. Can you
I'm
check
not
your
sharing
screen?
any screen. I'm not sharing anything yet. I'm just sharing the Meet class, the Zoom Meet interface. I'm not sharing the material yet. Of course, I'll share the material when we get there. I just want us to discuss before going into the material. I hope that's fine, sir. Do you understand me, sir?
Yeah, thank you so much. I understand now.
Yeah. So I
Can go
just
ahead,
want us
sir.
to have a conversation before going into the material. Now, so corporate social responsibility, as we have it, are the responsibility of a corporate organization to its social environment, right? The responsibility of an organization, of a corporate entity to its social environment, right? So what are we saying in essence? Those things an organization is not liable to do, is not mandated to do, but now it is now becoming mandatory. Does that make any sense? It's now becoming mandatory because lots of people want to see that's which you're doing. All right. So now it is mandatory. But then when corporate social responsibility came out, it wasn't mandatory. But because some organizations, right, like the OECD, Organization for Economic OECD, Organization for Economic and Corporate Development, CD, yeah, and Corporations Development, Organization for Economic and Corporate Development. Now, when OECD came into the light, right, we have the ICGA, International Corporate Governance Network. The two of them, they were asking so many questions. All right. And what's brought about these questions? We have professionals, we have people who are now investing, and not just individual. Investment has gone beyond, I have 50 million shares. I have this number of shares. Investment has gone beyond that. A lot of people have such kind of shares, yes, right? But there are some people that what they do is to invest. Do you understand? So those organizations, what do we call them? Institutional investors, right? So institutional investors are now there. what they do is they invest. They get pool from individuals. People contribute their pool, and then they take that money and invest it on behalf of their customer, on behalf of their customers, right? Now, this investment can come in form of your pension. Do you understand? So that's an example of an institutional investor. So when you contribute your money, your pension to your PFA does not just leave the money in the bank and then allow you to sleep there. No, they invest the money. So those people who are in charge are institutional investors. Now they've collected your money in form of pension, right? And of course, it is mandated on them by the by Pension Commission, NPC, Nigerian Pension Commission, that they should not just leave your money lying in state. Instead, they should invest that money and multiply it. But they need to be careful with the type of investment they go into. So they have responsibility, they have people to answer to. So what they do is that when they are investing your money, they follow it up. Now they have so many questions. They ask too many questions. And because of these questions, organizations came up. The OECD, the ICGN, they came up and then they started requesting for uh, rules that will guide the conduct of an organization. Don't forget the entity concept says that once you have separated the business from its owners, the owners have nothing to do in the business again. They don't have any control over the business again. The direction, the governance of the business have been entrusted in the hands of the board of directors. Am I right, please? For those of you who did CSME, am
Yes,
I
sir.
right?
You're right, sir.
Now, these people are asking questions and then they are saying that no, we don't want to see your income statement and your financial position again. Because even in that, we usually see something like corporate social responsibility, community service, community development. So, what encompasses this community development, we want to see. Then they started looking deep into the financial statement at annual general meeting. Yes, don't forget the only time they have opportunity of looking into the financial statement is at the AGM. All right. So they now started looking into it. Now they have questions. So corporate social responsibilities came out. Like, we want to see what you do. Don't just give us the income statement. Report on those things as well. The non-financial aspect of the company, we want to see it. That's where we have CSR. Now they've been doing CSR before, community service, community development, community projects, and the rest of them. So, but before, companies focus on shareholders' wealth. So that's why they come to the annual general meeting. They talk about the income statement and financial position, like focusing on this is what our shareholder, this is our revenue, this is our gross profit, this is our net profit, this will be the dividend, this is that. No, we don't want you to just focus on shareholders anymore. Yes, we want you to do something for the community, but that's what you're doing for the community. You need to report it to us. All right. So that shareholders wealth maximization is still there. And how do they maximize shareholders wealth? Is it that they increase their share price, right? If I bought a share of 50 kobo per unit, before the end of the year, I want to see my share grows or my shares grow into 75 kobo per unit or 1 naira or even 3 naira per unit. Then also I want to see what you want to give me as dividend. What's the dividend per share? All right. Now, but when all of these, when companies were focusing on profit maximization, they were growing criticism over environmental damage. There's something called for those of you who did CSME, there's something called footprint. Do you remember? Do you remember footprint? Whether you like it or not in my class, I'll take you to so many other topics, like so many
Yes,
other
sir.
courses, not even topics, so many other courses. The CSME you did, you are done with CSME, but don't forget you need it for your case study as well, right? So we'll be taking some of those things. Now, do you remember footprint?
Yes, sir.
What is a footprint?
Is the
Anyone?
trade footprint is the trade the organization leave behind over time.
Aha. A trail in terms of what?
Its activities to the
Hmm.
environment.
Yes. Any other person who wants to try? Any other person? A footprint is the effect of organizational activities on the environment, right? We have environmental footprint. We also have is it social footprint? I can't remember. It's been long I did CSME. Do you understand? Now we have those footprints. Now footprints are the things you leave behind. For instance, those who are into drilling, or those who are into extraction of crude oil. Now they are leaving a footprint. Now every time, the only footprint you can leave for the environment will be negative. You can never leave a positive footprint on your environment. You can leave a positive footprint to the society, but you can't leave positive footprint to the environment, because as you are working on the environment, is either you are falling trees and you are destroying the environment. So there is growing criticism over the environmental damage, then labor exploitation. So labor exploitation is on the society, the social footprint, right? And then we have some unethical business practices. Now, because of these things now, CSR came on board. That no, you can't just be damaging everything. Even though you can't do anything to the environment, you can't bring the environment to the position it was before your operation. Do you understand? But you can do something to the society, right? So that's why you can have a positive footprint on the society. Now, CSR now refers to the responsibility of a company towards the society, the environment, and a wider group of stakeholders beyond the shareholders. You know, the shareholders are the number one stakeholders, right? They are the number one stakeholder, right? Ooh, why is this class very silent tonight?
Yes, sir. Yes, sir.
Yes, sir.
Please, if your environment, if your background is not noisy, I'd appreciate if you unmute yourself. And you know, I always say it that you should read when you're coming to my class. I'm not so learned, I'm not so vast, but I can go into all the topics in ICANN. If I can go beyond ICANN, do you understand? So that's my own way of learning. That's how I read. I don't just read CSME for CSME alone or SBR for SBR alone. There are some things in SBR that I can find in other topics. How about I link them together and it makes it easy? Do you understand? So please, let's do that, please. All right. And that was why I gave us all the topics last week so that we can always prepare ahead of the class. Right? The screenshots are still there. After today's topic, I think we have, after chapter 5 is chapter 6. I think after chapter 6 is chapter 7 for those of you who were in the last class. Right? So please, let's prepare for the class. Do you understand? So that we can have an interactive class. I don't like when I'm the only one speaking in the class, especially on something I believe you know before. Do you understand? And if you know it, please don't hide it. Let's discuss, let's talk. All right? So that's it. Now, I was talking about corporate social responsibilities, right? So the corporate social responsibility now is the responsibility of a company towards the society, the environment, and a wider group of stakeholders beyond shareholders. So CSR is an involuntary action. You are the one who decides to do it. Do you understand? I mean, it's a voluntary. Did I say involuntary? English. That you want to comply. No one is asking you to tar the road in your area. Because even if you want to tar it, you need to see the government. You need to take the consent from the government. If you need the street light, you can do it. No one is asking you for it. They are beyond legal compliance. And you're trying to integrate ethical behavior, social responsibility, and environmental stewardship into your business operation. Do you understand? Ethical behavior has to do with what is right and wrong, right? Social responsibility has to be with your responsibility to the society. Now imagine you have a factory in an area, in a residential area, not even an industrial area. You know, we used to have an industrial estate. But in Abuja here, all residential areas have been converted. Okay, sorry. I've forgotten that this class We have our students all across. Now, in Lagos, you will still see some industrial areas. They call them industrial estates, industrial layouts. And those places now, they are all industries. You will see so many industries lining beside each other there. Do you understand? But in Abuja here, where we have virtually all residential areas converted to business areas, converted into business offices. Do you understand? Now, you have your industry, a factory in a residential area. Your generator will disturb them in the morning, in the afternoon, at night. You produce 24 hours, and yet you can't give them street lights. You will need to do something to compensate them. That's CSR. All right. So that's a social responsibility, environmental stewardship. You're just trying to bring it, incorporate it into your business operation. All right. Now, for stakeholders' perspective, modern corporations are accountable to a broad range of stakeholders. Right? I believe we know who our stakeholders are. Yes or yes?
Yes, sir.
Yeah.
So let's do it this way. Let's do it this way. So you have to mention the stakeholder and tell us what the stakeholders, tell us what that stakeholder wants from an organization. And who is a stakeholder? Let's start with the definition of a stakeholder. Who is a stakeholder? Anyone?
A stakeholder or stakeholders are people who have interest in an entity or in another or in an organization.
Okay. Is that
So,
all?
yeah, they include shareholders, employees, like that,
Mm-mm.
like
I want the definition first. So they have interest in an organization. Yes. Is that all? That's not all. That doesn't
Okay.
define a stakeholder. That is more like ownership.
A
Okay, I can.
stakeholder, a
No, please,
stakeholder,
please allow the lady to go. I think she wanted to go first. Please, the lady, kindly go, please.
Okay, all right. So what I'm gonna add is that stakeholders are those people who the decision or activities of the organization can actually get to influence them. So those activities or decisions made by the company can affect those stakeholders. So those people too. Yeah.
Okay. I'll also give you 50%. The same 50% I gave the first person. Yes, that man earlier. Please go ahead, sir.
okay, a stakeholder is someone that is being affected by the impact of an organization.
Mhm. Is that all? So this is it. I'll match the three definitions together. The last man, the two men talk about the impact of an individual. Three of you. Someone said impact of an individual, impact of the company on an organization. Now, this is it. Stakeholdership affects both sides. The impact, decisions, and activities of the organizations affect the people. Those people that the decisions of the organizations affect, and the decisions of the people also affect the organization. That is stakeholder. That is a stakeholder. Now, the activities of the organizations affect them, those individuals. The decisions of those individuals also affect the organization. That is the two-way. Now, if it is one-sided, then that is ownership, or that is like control. If, for instance, the activities of the companies affect some people, that means the company controls them because they don't have anything against the company. But if they also have something they can hold the company ransom on, for instance, now, when they make decisions too, it affects the company, then the two of them are stakeholders to each other. The company is a stakeholder to them, they are also stakeholders to the company. So let me give an instance. A customer who buys major components, or no, who buys the largest percentage of the products produced by a particular company. Let's say they buy up to 60 to 70% of what the company produces. a single customer or a group of customers. Now, if the company increases the price of those things, it will affect the customers, right? Am I right, please?
Yes, sir, you're right.
Yes, sir.
Now, if the companies also decide that the customers, if they decide that we are not buying from you again, will it affect the business or not?
It will.
That is what make make the two of them stakeholders to each other. So stakeholder is not just one-sided; it will affect both sides. Do we get it, please?
Yes,
Do you
sir.
get it? So that's it. Now we've established who stakeholders are. So give us a stakeholder, and I want just two persons to do that. Give us a stakeholder and how that stakeholder affects the business and how the business affects them. What are they expecting from each other? Yes, who's going first? One lady, one male, one female. Please.
Okay.
Okay.
Let me go first. Let me say shareholder, for example. Shareholder being the provider of finance to the company, his interest is how his finance is going to be maximized.
Mm.
So he provides the finance, then how that finance will be maximized with his interest.
Okay. So how does the company affect the shareholder? So the shareholder now wants his profit to be maximized. I mean, his wealth to be maximized, right?
Yes.
Aha. So how? What do they want from each other? How do they affect each other?
I didn't get your question very well.
How does the decisions of the business affect the shareholders? How does the decision of the shareholders affect the company? You understand?
Yeah,
Don't forget, stakeholdership means two of them are affecting each other. Abi?
yes.
So how do they affect each other?
I can say that will lead us to agency problem where the interest of these wants to, okay, since
Yeah, I
shareholder
understand the agency problem.
okay, since shareholder provide funds, like I said, he wants his wealth to be maximized. So anything, since he has provided the finance, his own objective is how the finance will be utilized, and it's not part of the people that runs the organization. He appoints manager to do that on his behalf. So those managers now, their interest is to see that the wealth of the shareholders are maximized. So their self-interest or their self-benefit should not be put forward the benefit of the organization, which is to maximize the shareholders' wealth. I think that's
Okay.
the least I can also say about it.
Okay, so let me tell you how they affect each other. Don't worry, that lady, I'm coming to you. Let me tell you how they affect each other. Now, if the directors who are the management of the organization, if they make bad decision and the company does not make profit, it will affect what the shareholders are expecting from the company. Am I right?
Yes, sir.
Aha, that's number one. Now, if at the annual general meeting, the company also decides to change the whole management or decides to shut down the organization, it will affect the business too, right?
Yes.
That's how they affect each other. That is what makes them stakeholders to each other. Do you get that now? Do you get that illustration, sir?
Yes, I get it.
So that's it. Yes, the other lady.
Okay, all right. So another stakeholder I would like to talk about is the creditors or the suppliers. I'm going to use the creditors. So the activities of the creditors that get to like affect the company. So if the creditors decide that, oh, we don't want to give goods and services to the company on sales again, it definitely has a way of affecting the company. Then on the hand of the organization too, if the organization can actually get to like pay back this creditors on time when needed, when stipulated. It also have like an effect on the creditors too, on their own businesses.
And their cash flow. Thank you. Yeah, thank you very much. So that's it. Now, stakeholders, we understand stakeholders. I want to believe you all understand stakeholders. If you have any question, you can always bring us back. All right. So that's it. Now, we have the stakeholders that companies or organizations are accountable to. We have the employees, right? We have the customers, suppliers, government, local community, society. Employees want their salaries and they are looking at when to increase their salary, right? Customers want to be able to get goods. Anytime I come to your shop, don't tell me you don't have. Me, as a customer, I want two things from you. Anytime I come to your shop, just tell me you have it. You have what I want. And the second thing is that give me at the lowest possible price. Right? Is that not it?
Yes, sir.
Aha. Then suppliers, of course, just like what she said, suppliers want to be sure that you can pay them. If they sell to you on credit, you can pay them back their money. Government, the only thing government wants from you is tax. Local communities, they want you to do street lights for them and something that, people in the environment, people in the community, you can give them scholarship, you can pay for their WAEC and all of those things. We have the society at large. Everyone is expecting one or two things from you. Now, stakeholders assess both positive and negative impact of a company's activities. Do you understand? So that's why some people just sit down and say, that company, they are not good. People are enjoying their product outside. But when you go to their production site, people in that area, in that community, they hate them. They are not good because they have a negative environmental impact to them. Do you think the people of Ogoniland, do you think they will continue to pray for Shell? They will continue to go to court and the community will be winning that case. Every time they go to court, they'll be winning the case. Because of what Shell has done to their water. Do you understand? So that's it. So we want to assess the positive and the negative impact of a company's activities on the environment, on the employees' welfare. Are they treating them better or less? Right? On the community development, ethical sourcing, and governance. So all of this will be looked at. All right? So that's it. Now, the scope of CSR is to cover business ethics. You know what business ethics are? Ethics within a business organization, ethics in the corporate world, right? Then also, how well do you treat your employees? How well do you treat, what's the welfare? How do you take care of their welfare? You have HMO for them, you have other things for them. Employees benefit. You know what employee benefits are, right? You remember employee benefit is also in SBRO. So in case you don't know, you remember employee benefits from your PSAF. And what again? Do you remember employee benefits? Anyone?
Yes.
Okay. So that's it. Now, then also human rights. Child labor. Do you have child labor? Do you have forced labor? Right? Then also it covers the area of community and societal impact, as well as environmental protection and sustainability. Environmental protection and sustainability. Okay. So that's it. Now, the approaches to CSR. Companies can decide to ignore CSR issues. Okay. They can decide to ignore CSR issues and comply minimally with laws and regulations. That is, what does the law say? We comply. And proactively adopt and communicate CSR initiatives. They can do any of those three. Is it that they ignore CSR? Is it that they comply minimally with laws and regulations? Or they proactively adopt and communicate CSR initiatives? Right? Now, for instance, there's something called presidential initiative on something. I mean, you will see ordinarily,
matters, remedies, and causes, right?
that person can mute.
listens.
That person should please help us.
It's just by not checking
Oh God.
in our order, right?
Thank you. Now, we're talking about initiatives, right? So yes, you can adopt CSR initiative and communicate it. You understand? So that's it. Now, increasingly, companies now adopt to communicate their CSR initiatives due to reputational, regulatory, and investor pressures. I told you about institutional investors at the beginning, right? Yeah. Pressure came from them. Then regulatory authorities are now forced to make some laws, regulations. It could be rule-based, it could be principle-based. Regardless, they made those laws. And also, you too, for you to paint yourself white, to increase your reputation, right? For your credibility, to increase your credibility, your acceptability, then you can go for that CSR as well. Those are the three reasons companies go for it. You understand? So that's it. Now, CSR reporting is largely voluntary internationally. Although there are some countries that are now mandating it, that no, you must report your CSR. And the report, since it is voluntary, the report may be titled the CSR report. It can be sustainability report. It can be ESG report. What is ESG? Hey, what is ESG? Anyone?
Economic, social, and governmental.
Economic, social, and what? Governmental or governance? Governance. Economic, social, and governance reporting. Okay? Then also, it can be social and environmental reports. You can give it any of this title. And usually, they publish it separately from the financial statement, but they publish it at the same time. In the same way, you have your what do we call this report? Chairman's report. You know, Chairman's report is published separately, even though they add it to the preface or the first page of your what do we call it? Your report, your financial statement.
Yeah.
Right? So that is it. Now, this report, your CSR report, is also published separately. All right? So that's it. Now, most times it is not audited because it is voluntary. But sometimes, or in some countries where it is mandated, then you must publish, it is audited. Do you understand? But in most part of our own country here, our own continent here, it is voluntary and then unaudited. Now, because it is unaudited now, you can decide to disclose whatever you like. You understand? You can decide to disclose whatever you like. All right? So now you can decide to show them only the positive things, because in the first place, what you need it for is to put yourself in a green light, in a situation where the general public will love you. We have done this, we have done that, all those English they used to speak. They'll tell you they have a foundation, they have this one, they will not go deep into that. But there is more to it. So that's it. All right. Now, we now have sustainability reporting, of course, which is also we can call CSR reporting as sustainability reporting. Right? Now, anyone, what do you understand by sustainability? What is sustainability? Anyone?
Is the ability to survive in the environment the entity operates.
I won't take that. I don't want. Give me something else. Give me something else, please. Yes, who else?
Okay, I would say using the natural resources or the environment in such a way that it will be useful for the other people coming in the future.
Yeah, I would say accept that. Now, it is the ability of a company, an organization, to provide for the needs of the current generation, we that we are alive. Your ability to produce and provide for our needs without affecting your production for the needs of the future generation. In fact, generations. Do you understand? So, how do you do it in such a way that you can take care of the present and it will still not affect taking care of the future? That is sustainability, meeting the present needs without compromising the future generation. All right. So sustainability business will now seek to preserve natural resources. That is, how do you make use of the natural resources now? And it will still not affect the natural resources that will be used in the future. For instance, people have been falling trees all this while and have been making exercise books. Abi, you don't know that it is tree they make exercise book from. Shebi, we know now. Abi? Shebi, we know.
Yes.
We know now.
Yes, sir.
All these are our A4 paper and all of that. It's from trees now. Now, so how do we keep following these trees? That before I was born, they were using the exercise book. Till now, we use A4 paper. Although everybody is now going digital. Oh. Do you understand? Well, yes. How do you preserve the natural resources you are using in such a way that you can provide for the needs of the current generation, the present generation, without compromising your provision for the needs of the future generations? Then how do you reduce environmental harm? If you see some drainages, if you see how some people dispose their waste, you will cry for humanity. Do you understand? So that's how do you reduce environmental harm? How do you support social development? How do you ensure long-term economic viability? All these are the things you do. Okay? Now, that now brought us to triple bottom line. Triple bottom line reporting, which focuses on 3 dimensions under sustainability. Right? Of course, we've mentioned them before. The economic dimension, the environmental dimension, and the social dimension. Economic dimension, we now talk about how do you create value, long-term value, human capital. Do you understand? So that's it. Then the environmental will now be your emission, right? Your waste disposal, water, energy. Your social will now be on labor practices, diversity, human rights. All right? So that's it. And that's why they call the sustainability a triple bottom line reporting. For those of you who did CSME, you must have done this before. Now, the drivers of sustainability reporting will now be government. Yeah, government regulation. Government will tell you what to do. Government will tell you that, no, we need you to prepare this one. We need you to report this one, right? Either you comply or complain. Comply or complain. That is principle based, right? We have some rule based as well that you must follow. All right. Then also, investors, like I said, are requesting for it. Investors are requesting for sustainability. Are we together, please?
Yes, sir.
Yes.
So that's it. Then also, we have risk management. All right. Yes, risk management is there. Then also we have cost savings and innovation, right? So all these are drivers to sustainability reporting. We also have reputational consideration when you want to consider your reputation, right? You want to protect your reputation. That's it. Now, the GRI, Global Reporting Initiative, and Global Reporting Initiative standards are used for sustainability, all right? And that's where we have our Universal Standard of 100 series, and we have the GRI 101, which is the foundation, GRI 102, GRI 103. Organizations are preparing this thing in case you don't know. Organizations that are getting certificates for these things. Do you understand? Organizations are getting certificates for it. Then also we have the reporting options whereby you can you can report the core disclosures, the core reporting, which is minimum disclosures. You can give us a comprehensive disclosure as well, whereby you have an extensive disclosure, you explain to us, and also you can give us a GRI referenced, that is partial use. All right. So yes, we can have that. Then also for your sustainability accounting standard board, yes, they now have a board whereby it is industry specific and not relating to every or all industries. Okay. It focuses on financial materiality. It is designed for mandatory Security and Exchange Commission filings, and it provides quantifiable and comparable metrics. Do we have anyone, please? Do we have anyone on this call?
Yes, sir.
Okay,
Yes, sir.
shall we proceed, please?
Yes, sir.
Okay. So now, if you're looking at the difference between them, the GRI, what did we call GRI earlier? Anyone? What did we call GRI?
As global reporting initiatives.
Sorry?
Global Reporting Initiative.
Global Reporting Initiative. Thank you, ma. Thank you, sir. Thank you for following. Now, your Global Reporting Initiative has a broad stakeholder focus, not just on the shareholders, right? But Sustainability Accounting Standard Board focuses more on the investors and financial materiality. But the GRI focuses on wider initiatives. Wider stakeholdership. Okay? The wider stakeholders. And that's it. Now, the consequence of poor CSR and sustainability practice is that it can damage your reputation. All right? You can lose customers and contracts. It can reduce your access to capital. Right? Yeah. It can result to higher regulatory penalties where it is mandatory for you to disclose some things or to do some things. Then also, you can have difficulty in attracting and retaining talent. Your employees self could go. Because companies who are doing better, who are taking care of them, will call them. They will offer them job and they will go. Do you understand? So that's it. And of course, it will reduce your share price. Anyways, that's that. Now, we also have integrated reporting. Integrated reporting addresses the limitation of the traditional financial reporting that we know, income statement, financial position, and the rest of them. And standalone sustainability report, whereby you are preparing your sustainability report on its own separately. The integrated reporting has come to address that challenge, that limitation. So you are not preparing your social responsibility or your sustainability report, you are not preparing it separately anymore. All right, you are incorporating it into your financial statement, not separately. Okay, so now integrated reporting, we have definition from IIRC. Please, I'm using so many synonyms here. What do I call it? Abbreviations, right?
Acronyms.
Acronyms, yes. Acronyms and abbreviations, right? So please, in case you are reading any of them and you don't remember what it means, please always reach out to. All right. So IIRC means International Integrated Reporting Council. All right. International Integrated Reporting Council. Are we together, please? Are we together?
Yes, sir.
Yes,
Okay.
sir.
Yes, sir.
Yeah. Now, international reporting International Integrated Reporting Council defines integrated reporting as how an organization's strategy, governance, performance, and prospects, right? They explain organization's strategy, governance, performance, and prospects in the context of its external environment and how they create value over time. Do you understand? Now, this,
Wait, sir, can you repeat this?
yes, I'll repeat it. It's in the material. So they explain how our organization strategy, the governance of an organization, the performance of organization, and the prospect, how they are in the context of their external environment. That is, what is the relationship of their strategy with their external environment? Do you understand? So what is the relationship of their strategy with their environment? All right. Now, what we are trying to do here is that we want to understand how your strategy affects your external environment, how your governance, the governance of an organization affects the external environment, right? You know what we mean by external environment here? And I'm talking of external environment. You understand what it means, right? Am I
The
right?
environment that the entity cannot control.
Yes, the environment the entity cannot control. All right, so that's it. Now, what do you do, or what is your impact on this external environment, and how do you create value over time? So that's what we have there. All right, now there's something called the rise of this integrated reporting. The rise of integrated reporting. How did we come about integrated reporting? Now, integrated reporting is increasing because senior management in large organizations are now expected to provide more details on how they use the organization's resources. Do you understand? So how do they do it? Right? Now, how do they make use of the resources at their disposal? Now, traditional reporting will focus on financial performance, Abby, but this time around, it is becoming more. Now, we are not saying that an organization has more capital other than just the financial capital that is provided by shareholders. Do you understand? Now, of course, financial capitals are available. And what are these financial capital? Your shares, your this one, your that one, all those things, the pool of funds generally. Also, we have manufactured capital. Do you understand? And that is products, output of an organization. We also have intellectual capital. Oh God. The way intellectual capital has now brought about intellectual property rights in Nigeria. Do you know what intellectual capital is, please? Anyone? Intellectual capital?
Intellectual capital has to do with, I can't recall the definition for vividly, but it has to do with the knowledge somebody acquire over time that can now be translated into maybe money, like goodwill, like patents, like copyright, and all of that.
Yeah, that is when you are documenting it. That is when you are making it a capital. Now, intellectual property or capital. Intellectual property or capital is like what you have produced. Innovation and invention. Not just what you learn. You can learn it and it stays in your head. But what you have invented, what you have created, right? That's intellectual property. And like I said, it has given rise to intellectual property right. And intellectual property right is now something that is very, very highly demanded. We are not going there today. That one is for law students. Intellectual property is not in accounting. We only understand intellectual property as an intangible asset. Abi? So that's an intangible asset. Now, we also have human capital, which is your management, your employees, the capabilities and the experience of your staff, right? We have natural capital, which is natural resources, the environmental natural resources, land, water, Abby, am I right? The natural resources we have, and the water, the land, the weather, all those things. We also have the social and relationship capital as well, whereby your relationship between the community, between your company and the community, between your company and the stakeholders, your company and the shareholders. Do you understand? Your network. So that's it. All right. Now, all these are what gave birth to integrated reporting. Are we together, please?
Yes, sir.
Yeah, they gave birth to in the integrated reporting. Now, what's the benefit of integrated reporting? Integrated reporting is here to improve your strategic thinking and decision making. All right? To improve your strategic thinking, right? And decision making. Then also to integrate your financial and non-financial information together. Right? So to integrate them together and bring them into a single account. Then also to enhance risk management. Right? How do you manage your risk? Then also to ensure that you have a stronger or to enhance a stronger governance and accountability. And also, of course, to improve access to a long-term capital and reduce duplication across reports. Right? So that's it. Now, that is the benefit to those who are preparing the financial statement. But what about the benefits who are using the financial statement? It can create better understanding of the value an organization has created. Do you understand? You will understand what the company is going through, the value they have created. You will also understand or have an insight into their future prospects, what they intend to do in the future. Okay? Then it creates a linkage, a link. There's a difference between linkage and leakage. A linkage between strategy, sustainability, and financial performance. And the last thing is that it improves comparability and transparency. Do we have any question, please? Any question? Do we have any question? Okay, so let's move on. Now, the progress towards global adoption. How do you what is the progress that have been made so far? Right?
So we can't see the screen.
You can't what?
It's back.
I can't hear you, please.
Don't worry. Actually, the screen went away, but it's back now.
I'm sure that should be your network. It could be mine as well, though. But I hope we can see it now. That's the most important thing. Can we see it now?
Yeah, so we can see your screen.
Yes.
Okay. Now, the progress towards global adoption of sustainability reporting. Right? Now, in some countries, it is mandatory. For instance, did I say intellectual now? Integrated reporting is mandatory in South Africa for those who are quoted on the stock market. So when we are saying it's mandatory in any country, it means in their stock market too. And companies that are not quoted on Nigerian stock market now, you can't expect anything from them. Right? And now those people who do on stock market, now then be Adam which up Apollo. So they are the ones that anything mandatory is upon. Do you understand? Now that's it. Now it is mandatory in South Africa that integrated reporting is done. There's growing adoption across Europe as well and emerging markets. Right? And also we have support from institutional investors. You can see that they keep mentioning these institutional investors. Those people are wicked. They are very, very wicked. And what are they trying to do? They're trying to protect our wealth. Do you understand? They're trying to protect our money. Do you understand? So that's it. That's why they can be very aggressive when it comes to how our money is being invested, or the type of investment they go into. All right. Then of course there's an alignment with IFRS S1 and S2, section 1 and section 2. Right? Then also we have integration of our SASB. We talked about that earlier, right? What did we call SASB again? What did we call SASB?
Statements of Accounting Standard Board.
Accounting Standard Board.
No, we didn't call it Statement of Accounting Standard Board this night. This night, we did not call it Statement of Accounting Standard Board. What did we call it? Do we have anyone? Or do you need me to take you to where it is?
So I think Sustainability Accounting Standard Board.
Is it Standard Board? Sustainability Accounting. Sorry. Sustainability Accounting Standards Board. Right? So that's it. Now, for Sustainability Accounting Standard Board, just like we said, I hope you have seen it. I scrolled up for you guys to see it too. For those of you who were, can you see it now? So not Statement of Accounting Standard Board. We have not talked about Statement of Accounting Standard Board now. That one is your IAS 1. We're talking about sustainability here.
Get this material at the end of the class.
Yes, you will get the material.
Okay.
You will get the material. So that's it. All right. Now we have an integration of the Sustainability Accounting Standard Board and integrated reporting framework under the ISSB. ISSB means International Sustainability Standard Board. International Sustainability Standard Board. But the challenge we have is that it lacks global enforcement. Right? Yeah, it is principle based in so many countries. All right, it is principle based. So there is no compulsion, there is no enforcement. Some, even those countries that permit them to use, or they use it, there's nobody is enforcing it on them. And the cost and complexity that is involved, it is expensive and it is complex. Right? Imagine having to prepare a report on sustainability. So that's another thing. Then also it is subjective and judgmental. Subjective in the sense that you only write what you want people to see. All right, so that's it. And of course, it has assurance challenge. You cannot give me an assurance on it now, because you prepared it for credibility purpose. So there is no assurance that everything you have given me in that report is true. And the last is that there is risk of boilerplate disclosure. Boilerplate disclosure. All right. So these are the things. Now, we have all these challenges. All right. We have all the challenges. And of course, what we need to do, the solution will also be to do the reverse of it, right? So that's it. Now we have IFRS S1 and S2, which is the game changer that has changed the whole thing on this sustainability reporting, or what do we call this? What do we call it, please? It's not integrated reporting, sorry. Integrated reporting, yeah. Sustainability is still in my mouth. Integrated reporting. Now, the game changer of S1 and S2. For FIRS S1, sorry, IFRS. I can't believe I also made that mistake. You know the difference between IFRS and FIRS, right?
Yes.
So please do. Now, for IFRS S1, it focuses on general sustainability related financial disclosures. Right? IFRS S1 focuses on general sustainability related financial disclosure, everything you need to disclose. All right, everything you need to disclose, you have to disclose it. All the material information about sustainability, right? Aha. So you need to tell us. Then you focus on material risk and opportunities as well. All right. Then it is gap agnostic. Gap agnostic. Now, gap agnostic means that we are talking about gap, right? We are saying that you should disclose to your investors and ensure that they understand the connections between the sustainability risk and the opportunities. Do you understand? So we are saying that you should tell them the relationship between sustainability risk and the opportunity. And of course, it follows the principle of gap. It is generally acceptable accounting accounting principle, right? So that's it. Then also it links sustainability disclosures to financial statements. All right. Any question? Shall we proceed?
Yes, sir. Let's proceed.
Okay. Now, for IFRS 2, that one talks more about climate specific disclosure. All right. Climate specific disclosure. Now, it talks about the physical and transition risk. Okay. Yes. And as well, we have scenario analysis where we have the scope of emission, we have metrics and targets as well. All of these are there to significantly reduce the greenwashing risk and improve comparability in our report. All right. To improve comparability in our reports, in our integrated reports. So that's it. Now we have the specific Nigerian specific context where we have a Nigerian Stock Exchange Sustainability Disclosure Guidelines of 2018, Security and Exchange Commission Sustainability Reporting Guidelines. We have Nigerian Sustainability Banking Principles, Nigerian Code of Corporate Governance 2018, NCCG. Then we have alignment with SDG and ERGP. All right. So these are the things. Now, Nigeria has moved from voluntary encouragement to quasi-mandatory. It is partially mandatory. Do you understand? So it is partially mandatory. All right. So that's it. Now, when you're drafting analysis, you focus on material issues. When you're drafting your integrated reporting, right? You focus on material issues. Do we understand? We focus on material issues now, okay? And then we link sustainability to strategy and value creation. Then also, you use your KPIs and targets and avoid any narrative. Okay? Avoid vague narratives. Now, that is when you are drafting it. When you are analyzing your report, you assess consistency with strategy. Okay? What is the consistency? That's why it enhances comparability, right? Do we understand? Are we together, please? Is anyone there?
Yes, sir.
Okay, don't worry. We'll soon end the class. It's already 10:30 and our time is up. So let's just see if we can complete this chapter, because if we don't complete this chapter, you'll complete it too. You will complete it by yourself. Okay, I think I've mentioned so many of these things as well. But let's just move. Now, when you're analyzing it, all right, you analyze assess the consistency with strategy, evaluate the balance, that is the good news and the bad news, check your comparability and metrics, and examine governance oversight. And when you are criticizing, when you are critiquing it, right? So you identify the greenwashing, question lack of assurance, right? So you are the one criticizing your reports by yourself now. I like the weak linkage to financial performance and note the absence of forward-looking information. So that is it. Now, okay, I've talked about the rise of integrated reporting. Yes, I've talked about that. I've talked about this financial equity, all these equities, I mean the capitals. I've talked about them. Yes, I've talked about them. Then International Integrated Reporting Council, I've talked about it as well. Any other thing? So the objective of International Integrated Reporting Council to improve the quality of information, right? To promote cohesive and efficient approach, to enhance accountability and stewardship, and also to support integrated thinking. I think I've discussed some of these things as well earlier. Now, we also have international framework for this integrated reporting. And the essence of this international framework is to provide a principle-based foundation, not a rule-based. So if it is principle-based, it means you either comply or complain. Am I right, please? Am I right? Either you comply or you complain. Is that it?
Yeah. No, rule
Okay.
based is the one that you must comply.
Rule-based is what?
Like it's actually rigid. You have to adhere to that.
Rule-based is compulsory, but principle-based is either you comply or you complain. Complain simply means that you tell us why you can't comply. Do you understand? So that's it. Now, so we don't want to have a basis for our principle basis, right? For the preparation of integrated reports. And then we are looking at requirements that are set out in bold paragraphs, those ones that are not bold, but they provide application guidelines. Okay, and we have the symbol of IR that is used to designate integrated reporting. And this is the way they write their integrated reporting. It's a symbol, right? We call it a trademark. Do you understand? Yeah, it's a trademark. So the framework is used to clearly identify and designate communication. All right? Yes. So any report that claims to be an integrated reporting and referencing the framework must apply all mandatory requirements, everything that is mandatory, unless reliable information is unavailable. Okay? Or disclosure is prohibited by law. By law, you can't disclose, or disclosure would result in significant competitive harm. So because it will harm the public, please, you can conceal the information. Okay? Then we have government statement as well. And that one talks about what governance statements, right? What those who are charged with governance, they are to confirm the responsibility of the integrity of that report. Yes. Any report produced by an organization, the integrity of that report has to be confirmed by those in governance, the board of directors, right? And that they have applied their collective mind to the preparation, and whether the report complies with the framework, right? That is the integrated reporting framework. And if such statement is not included, the report must explain. Don't forget, it is principle based. Is either you comply or you explain, right? Explain the role played by the governance body and steps that has been taken to include the statement in the future. Okay, we are unable to do it. Oh, we're unable to give you this report. Oh, so what role did you play? Okay, so we have set up a committee and we intend to do this, do that, do that. All right. So what steps have you taken that will ensure that you do something, you take a step, I mean, or you give us that report in the future? What step have you taken to assure us that the report is coming in the future? And also, what is the expected time frame? All right. So that's it. Now, the principles of integrated reporting, when you're preparing an integrated reporting, you have to be strategic focus and future orientation. All right. Then also look at the connectivity, the relationship between information. Then what's the relationship between stakeholders? right? The materiality of that information, of the reports, right? And how it affects value creation. Then of course, the reliability and completeness of the reports, consistency and comparability. All of these are to be looked into. Please, if there is any of this thing you can't explain or you need explanation on, or you want me to explain again, please just call me back. If not, I believe when you are reading, you have better understanding. And don't forget, once whatever we do today, you read it again in the next class, because you still have to present it in the first 15 minutes. Am I right? Am I right, please? The same way that lady did to us today, did for us, that she explained to us, right?
Yeah, you're right, sir.
Okay, so let's prepare for that as well. Now, the key questions that must be answered in an integrated report is: what does the organization do? What type of environment does it operate in? Right? How does governance support value creation? What is the organization's business model? The opportunity, and also how the opportunities affect value creation and how they are being managed. The organization's strategic objectives, the organization's performance, the uncertainties they might face in the future, and also how they are determined, and how the organization determines material matters and measure them, right? How does the organization determine that? So that is it, and these are the things we have there. Now, the implication of introducing integrated reporting now, all right? So it will affect IT costs significantly. Do you understand? Because you have to invest in IT, information technology, right? Then, of course, time and staff costs. It will consume time because you have to spend additional time to prepare the reports, right? It can result to consultancy costs as well. So if you're adopting these reports for the first time, it requires specialist external advice. Okay, so that's it. And the disclosure risk, the potential competitive disadvantage you put your company into if you reveal some of the sensitive information. And don't forget, you have to avoid see finish. Abi? So that's what we have here. Any question from anyone? Any question from anyone?
Hello, sir. Good evening, sir.
Good evening, ma.
Thanks for the lecture, sir. But sorry, please, can you just, in one word, that sustainability discussion we
Reporting.
had? Yes, just in one word for me to just summarize it, like a summary of it.
Okay, so sustainability has to do with the ability of an organization to provide for the needs of this current generation without affecting the future generation. Right? So how do you take care of your own current need now without affecting your future needs? That is sustainability. Did I answer your question?
Yes, perfectly. Thank you, sir.
Welcome. Any other question, please? Any other question? Okay, so in our next class, don't forget you have to give a report on what we have done today, and also read through chapter 6 of your ICANN study pack. All right, read through chapter 6. We'll continue our conversation from there. In our next class, we are doing chapter 6 and chapter 7. Okay, so I'll see you all in the next class. Have a wonderful night rest, everyone. Bye-bye.
Sir, please, just a minute, sir.
Okay.
Hello?
Yeah,
Okay,
go
sir,
ahead.
this our study pack, we are using this 2025 own, sir, right?
Yes, ma'am.
Okay, thank you very much.
Welcome. All right, good night, everyone. See you all in the next class.
Good night,
Thank you,
sir.
sir.
Thank you so much.
Good night, sir.
Yeah.
Thank you so much.